Ladies and gentlemen, welcome to all of you. We're blessed with some shade here in this location. And this is an exciting day for us. May I say, on a personal basis, I heard very clearly one thing that then candidate Bill Clinton started saying back in August of 1991 when he started talking about the importance of community development banks. It has, from the very beginning of the President's economic plan, been an important cornerstone. In order for the economic plan to work, it has to include measures like this. It does include measures like this. But in order for community development banks to work, the economic plan has to pass. So it's part of the same effort. Willie Sutton used to say that he robbed banks because that's where the money is. It's still true. But the trouble is, many communities don't have a bank. People in these communities cannot cash a check, get a mortgage, get a loan to start a business, or to expand a business that's doing well. And so today the President is going to announce a bold, innovative plan that will begin to redress the balance. It will provide rural and urban communities affordable credit, capital, and basic banking services. That's what community lending is all about. Now, we could give you a lot of statistics about why this is so important. But these programs all come down to one basic question. Do they help people? Do they work? And the reason so many of us are excited about this idea, the reason the President has advocated it for so long, the reason so many leaders from the House and Senate are here who have worked on this idea, is that everybody who has been in a community where one of these institutions is located has been captured by the excitement that people in the community feel. It works. The idea works. And so today I'd like to recreate a little of the sense of excitement that many of us have shared with the President in seeing this idea work by introducing three people to you who have been helped by community banks. Their stories demonstrate better than any set of statistics why we need a nationwide system of community banks. I'm going to introduce all three of them, and the third will then introduce President Clinton. I'd like to ask, first of all, from North Carolina, Tim Bazemore to come forward. Tim Bazemore is a gentleman whose employee-owned company desperately needed capital to expand, but had trouble getting credit until they turned to the Center for Community Self-Help. Then we'll hear from Beverly Ross, and if you could come forward also, a young woman from Ohio who owns Lakeview Stables. Business is booming for Ms. Ross thanks to a loan from the Athens Small Business Center. And then finally, we'll hear from Joe Holland from Harlem in New York City, founder of Hark Homes, a homeless shelter for men, and also the owner of the first Ben & Jerry's franchise to be located in an inner city. And then at the conclusion of his comments, Joe will introduce President Clinton. But first of all, Tim Bazemore from Bertie County, North Carolina.
Thank you. I am Timothy Bazemore. I'm the founder, president, and general manager of Workers-Owned Sewing Company. This company
I left Harlem this morning with a cooler full of ice cream destined for the president's palate, but that cooler has been under attack ever since. I got to the airport, the baggage claim aide decided he needed to dump the dry ice out because it would be a hazard on the flight, and check the ice cream. Aboard the flight, The pilot decided to keep the ice cream in his cabin because he thought it would be cooler up there. And at each security checkpoint getting in here to the White House, the cooler seemed to get lighter and lighter as I went along. So I hope the destiny of this cooler will be, cooler full of ice cream will be fulfilled, and that you, Mr. President, you, Mr. Vice President, will be able to get some along the way. In 1989, I was invited to Vermont to speak about Hark Homes, my holistic housing program for homeless men. While I was there, I had an idea. I thought it was a great idea, selling ice cream to employ the homeless. Job creation was a key strategy. I thought everybody, including the bankers, would come running to help me establish the first Ben & Jerry's scoop shop in the inner city, right on 125th Street in the heart of Harlem. I figured that hiring formerly homeless men and channeling profits to support Hark Homes were ideas worthy of support. Little did I know that business projects, no matter how noble, don't happen simply because they are good ideas. You must have access to capital. I didn't, and most inner city entrepreneurs don't. No capital access, no job creation. It's just that simple. What's not so simple is how to foster grassroots enterprise in impoverished communities. The critical facts of my deal scared away all the lenders. They didn't like the fact that this was the first Ben & Jerry's in a distressed neighborhood, that we planned to hire the homeless, that we'd be located in the heart of Harlem. None of the banks would touch it except for one, Community Capital Bank of Brooklyn. Lyndon Comstock, Steve Lane, and their colleagues at CCB were not troubled by the uniqueness of my deal, so they became my bridge over the troubled waters of unfriendly financing. Urban poverty will persist without the broad-based support for grassroots enterprises and the kind of community-sensitive lending that this Ben & Jerry's project in Harlem represents. And grassroots enterprise needs access to capital. The significant outcome in Harlem is not simply the establishment of an enterprise that empowers the hard to employ. The unanticipated value can now be seen in the new symbols of hope in the community these days. The formerly homeless helping each other to rise, other grassroots businesses popping up, and children with ice cream cones, with role models, and with smiles. If this legislation being announced today can indeed be passed, there will be many more jobs and much more hope and many more smiles. And now it's with great pleasure that I introduce a man who's committed to visionary leadership, to community-based approaches to inner city problems, and is also, I might add, a great lover of ice cream, the President of the United States, Bill Clinton.
Thank you. Thank you very much. Thank you. Thank you. Thank you very much. Thank you very much. I want to say to Joe and Beverly and Tim, they have stated more eloquently the case than I ever could for the work we are here to begin today. I thank them for their presence here and for their fine presentations. I want to acknowledge, too, the presence in the audience of so many people who've been involved in community development financing for a long time. I thank all of you for coming from all over America. We have a remarkable group of people here from the United States government, from the executive branch today. Secretary Benson and Undersecretary Newman from the Treasury Department, Secretary Espy and Undersecretary Bob Nash from the Agriculture Department, Undersecretary Terry Duvernay and Assistant Secretary Cuomo from HUD, the SBA Administrator Erskine Bowles, the Comptroller of the Currency Gene Ludwig, the Federal Reserve Board Governor George Lindsay, the Acting Director of the Office of Thrift Supervision Jonathan Feicher, the FDIC Acting Chair Andrew Hove, and many, many others, showing that this administration has worked together to try to come up with this proposal. I'd also like to say that we have some specific members of Congress who are here today whom I will acknowledge, but just for the rest of you who have been working in this field for a long time and who have felt left out, I'm going to do something I don't think I've ever done before. I'm going to ask every member of Congress who is here to stand so you can see what support you have in the United States Congress. Would you all please stand? By my quick count, there are 41 or 42 members of the Congress here, a very significant representation of people who asked me actually they felt so strongly about coming here to delay the start of our ceremony this morning for a few moments so that they could complete their votes and still come up here. I'm particularly pleased that the House and Senate Banking Committee chairs have agreed to sponsor this legislation and shepherd its package through Congress. Representative Henry Gonzalez and Senator Don Regal have both long been champions of reinvesting in our communities. The Senate Banking Committee will hold its hearing on this bill this afternoon at 2 o'clock. The subcommittee chairs of the House, Congressman Neal, Kanjorski, Kennedy, Frank, and Flake, have all joined to make sure this bill will receive consideration by the full House Banking Committee within the next few weeks. There are 4 members of the House I would like to pay some special recognition to. First, Representative Joe Kennedy of Massachusetts, who has worked to make the Community Reinvestment Act a reality for all Americans and all communities, and I thank you for that. Second, Representative Floyd Flake of New York, who has worked to provide innovative ways to spur reinvestment by major financial institutions and communities and has actually tried to do something with his ideas in the private sector as well as with his work in Congress. I thank him very much for his efforts. Next, Representative Maxine Waters of California, who has been the conscience that has kept community development banking and strengthening the CRA on the nation's legislative agenda. Thank you very much, Maxine. And finally, Congressman Bobby Rush of Illinois, who has forged a coalition of more than 70 co-sponsors for a community development financing institutions bill that shares common ground with my initiative. I look forward to working with him in Congress and across the country to champion reinvesting in all of our communities, and I thank him for mobilizing 70 members of the House of Representatives in this cause. Thank you, Bobby. I'd also like to pay some recognition to a person here who has for many years, more than I can remember, pointed out to the American people that most poor folks in this country and most people who've been left outside of the mainstream want a hand up, not a handout. Reverend Jesse Jackson, thank you for being here. Ladies and gentlemen, as you know, I have just returned from the summit of the World's 7 industrial nations in Tokyo. What I saw there indicated to me that from Harlem to the south side of Chicago to south central Los Angeles, there is a feeling shared from Tokyo to Toronto. People want more control over their lives, their families, their communities, and their countries. The movement for political reform is running in high gear in all these countries because there is such a demand for economic opportunity so that people can live up to their God-given abilities. This administration has tried to pursue this demand in 2 ways. First of all, to have a good overall economic policy, a policy for bringing the deficit down, a policy for increasing investment in our country, a policy for broadening the rules of trade in ways that help Americans who are working for a living. But secondly, we have to recognize that there are certain specific problems that are unique to our country, unique to our states, unique to our communities, and they require a specific response. And so we have developed a technology policy, a policy for defense conversion for communities and people who've been hurt by cutbacks in defense spending. We have sent to the Congress a proposal to create empowerment zones which will complement this effort to encourage people to invest in distressed rural and urban communities in this nation. And today we take up the community financing issue. A few days ago when I was in Japan working to build a new global economy, my hand was strengthened because of the progress that has been made in Congress in dealing with these larger issues, reducing the deficit and investing more in education and training. It enabled me to ask our friendly competitors to lower their trade barriers so that we can increase American jobs and American exports, to work with us to increase economic growth, keep interest rates down, and make common cause to battle high unemployment, which is a problem in every advanced nation in the world today. Today I will report to a bipartisan leadership meeting of the Congress on the achievements of this summit. But I will also have to tell them that the challenge remains. We can only enjoy the fruits of the opportunities created at the Tokyo meeting if we follow through on the commitment to pass the economic plan now before the Congress, and if we take the initiatives like the one we're here to celebrate today. To those who would do nothing or let us slide back into the status quo, I would say that we must go forward. We must adopt the largest deficit reduction plan in our history. Look how low the long-term interest rates are now because of the efforts that are being made. We must adopt these strategies to bring jobs to America. We must maintain our nation's leadership in the global economy. On the issue of whether there must be economic change in a nation desperate for jobs and growth, there can be no doubt of the answer. Today, I am sending to Congress an innovative proposal that will bring new life and new opportunity and new directions to communities all over America that lack capital and credit, the kinds of basic banking services that these three fine people needed so badly and had to look so long for. This proposal creates a fund to provide grants to new and existing community-based lenders. The fund will provide about $400 million over 5 years and will employ a number of measures to increase significantly the total money provided to communities through these community institutions. Under this plan, every dollar the fund provides to a community development bank must be matched at least by another dollar of private capital. Other community development financial institutions will also be required to match assistance as well. The Treasury Department predicts that this matching requirement and the leverage provided by the institutions will produce at least $2 billion in additional investment. If you look at the size of the average loan in these kinds of institutions, leading to the number of jobs created that are represented by the three fine people on this platform today, the potential for creating new jobs in America through this initiative is absolutely enormous. And they can be created in places where people have long given up on the free enterprise system simply by making the free enterprise system work for a change for those people. These institutions come in a wide variety of sizes and shapes. They're banks with a special commitment to community development. They're community development banks set up for that purpose only. They're credit unions. They're micro-enterprise loan funds. I can tell you this, most of the enterprises that we're talking about helping that were in existence in the 1980s that made loans to poor people who lived in their community or to struggling small business people had a lot lower failure rate than some of the high-flown financial schemes that were subsidized by other government policies in the last decade. Because of the commitment and understanding of people in all different kinds of financial institutions, every type of community development financial institution will be eligible for assistance under our program. The existing network of community lenders have demonstrated that when there is a constant commitment to this kind of development, you can produce growth and jobs. Many of you with us today, from Chicago's Shore Bank to North Carolina's Self-Help Credit Union to Arkansas's Elkhorn Bank, which Mac McClarty and the First Lady served on the board of, and which I helped to raise funds for when I was in a previous position, understand how economic growth is built from the grassroots. It works in urban areas, it works in rural areas. We were wondering when we set up this bank in Arkansas whether small towns and rural areas really could benefit from the kind of strategy that had worked so brilliantly for the South Shore Bank in Chicago, and the answer turned out to be a resounding yes. The government's role in this is crucial but limited. The real solutions must come from the community, from the people who live there, who know their neighbors. It is our job to empower those communities with the tools they need to generate growth and jobs, and then let the hard work and the determination of the people pay off. At the same time, I recognize that without the involvement and investment of major banks, low and moderate income communities will still be deprived of a full range of economic opportunity. The Community Reinvestment Act of 1977 requires that banks and thrifts meet the credit needs of the entire community in which they do business. And while the CRA has played an important role in making credit available to underserved urban and rural communities, I think we would all admit that it hasn't lived up to its potential. The current enforcement system relies too much on public relations documentation and not enough on real lending performance. This has been a pain for everybody involved. Too much paperwork for the banks and not enough investment for the communities. That's why I am sending a memorandum to the 4 federal banking regulators that requires them to implement a series of reforms around CRA, designed to increase investment in communities that need it, while simultaneously streamlining and clarifying the regulatory process. The policy will be good for banks, good for communities, good for borrowers, and it represents real change. These actions today fulfill a commitment I made during the last campaign, when I promised that we would work hard to unlock the energy and the entrepreneurship that lies latent in the hearts and souls of men and women in this country in every community. This proposal will enable them to take a small loan and start a business, to turn their dreams into storefronts and then expand those storefronts into chains, creating jobs for their neighbors and bringing opportunities to their neighborhoods. It will make them a part of the movement for democratic capitalism and growth that is reshaping the entire world but has left too many Americans behind. Now I'd like to introduce 3 people who are going to help us carry out these commitments. Hugh McCall, the CEO of Nations Bank, Irvin Henderson, the chair of the National Community Reinvestment Coalition, and Ron Grzinski, the chairman of Shore Bank in Chicago. Gentlemen.
Well, thank you, Mr. President. It's an honor to speak today on behalf of the banking industry, especially when the agenda is how political leaders and the banking community can work together to achieve greater prosperity for all Americans. Banks and their communities depend on each other. Banks have a responsibility to meet the needs of their communities by making loans in every neighborhood, rich and poor. But it goes beyond responsibility. The fact is, a bank that limits the economic opportunity of a certain neighborhood or of a certain category of borrowers ultimately limits its own opportunity. Our communities, in turn, have a right to expect their banks to provide the credit that primes the economic pump. Our communities also have a second right, a right to strong and effective public policy that holds banks to high standards and results in the flow of capital to the areas that need it the most. Now, for too long, banks and their communities have lacked that kind of public policy. The proposals announced today by President Clinton promise a new, more effective approach, and they reflect the determination of the administration to channel capital to small businesses and moderate income neighborhoods. Of course, these initiatives and others are dependent upon positive action by the Congress on the President's budget thereby removing economic uncertainty and restoring public confidence. But let's look at these initiatives. First, the creation of a fund to provide assistance for community development financial institutions will expand a critical element in the nation's credit network. Because they are less regulated, these institutions have proven themselves to be effective in reaching the neighborhoods most in need of credit. This proposal would only enhance their effectiveness. But banks and CDFIs can also act as partners. In North Carolina, for example, lenders from Nations Bank and the Durham-based Self-Help Credit Union work hand in hand, referring customers to each other to ensure that all needs are met. Second, and even more important, is the President's commitment to draft community reinvestment regulations that recognize performance over process. Nations Bank and others have advocated a results-oriented CRA because there is an enormous gap between the intent of the law and what it actually does. That, in turn, creates an expectations gap. The moderate income couple in South Dallas who wants to buy a new home isn't served by a law that measures how much time their banker devotes to internal planning meetings. That couple is served by a law that measures whether their banker finds a way to get them the mortgage they need. A small business owner in Baltimore, hungry for operating capital, won't succeed if her banker is buried in regulatory reports. That small business owner depends on a law that encourages her banker to get out in the community and loan her the capital she needs. A new approach, one that bridges the gap between expectations and reality, can make better partners of banks and community groups. A new rule, one that sets tougher, more objective, more quantifiable standards, would send a clear message to banks that we will be measured by our results, no excuses. Mr. President, your proposals are in the best interest of both banks and our communities, and I think you'll find Nations Bank and other banking companies are eager to work with regulators and community groups in the formation of policy that sets measurable, objective standards and makes true partners of all of us involved. Thank you very much. Thank you, Mr. President.
Mr. President, Mr. Vice President, congressional leaders, community advocates, distinguished guests. The distressed and underserved communities and neighborhoods of this country are at a critical point. The challenges and needs of the Americans that live in these American neighborhoods, in some cases, is as great as those of some third world populations. We all know the statistics of despair, but too few of us understand the formula and projection of the nonprofit community and the rest of the private sector. As the President has stated, and as we have demonstrated for years, helping people become productive in our society helps all Americans. As the poor and underserved become a part of our great economic engine, they become taxpayers and consumers that help shoulder the burden of modern society. Our greatest natural resource are our people. And as many others have said, we cannot afford to waste even one. The Community Development Financial Institution legislation is an important beginning for federal investment in those communities that have great potential. This investment will generate jobs and hope that can be sustained by a strong economy. Given that small and minority businesses are the job creators of the future, then we must increase their access to capital. It encourages me to hear Nations Banks and other institutions say that they will be there as these organizations and institutions need their help. Community development financial institutions, including community development corporations, have the proven strategies necessary to win this battle. The legislation, with its protections, provides the experts of community economic development, those individuals and organizations that have been doing it, the much-needed catalyst support to carry this battle to the next level. Our coalition, with over 250 members nationwide, is a diverse group of advocates and development organizations that seek to increase equal access to credit and banking services because it is essential to our economy and the well-being of our society. From the very beginning, we have stressed performance in lending as the true measure of a financial institution's compliance with the Community Reinvestment Act. Commitments and planning become substantive only when they lead to the lending and services needed to balance the scales of opportunity for all Americans. The emphasis on performance moves the debate of an institution's value to its communities into the correct arena, utilizing the correct criteria. Clearly, a reduction of unnecessary or duplicative paperwork would be a benefit to lenders. However, a reduction of vital information and data necessary to determine the true commitment of any given lender in a given area must not be sacrificed in the name of regulatory relief. The new direction championed by Comptroller Ludwig and other administration representatives gives us hope that the regulatory community will emphasize the importance of comprehensive investment and encourage lenders to embrace the benefits of the act. As John Taylor, the executive director of our coalition, has noted, it is refreshing and wonderful to have an administration that views community development and development financing institutions as American assets. We applaud President Clinton for his leadership and foresight in creating this initiative, and we stand ready to do whatever the community side needs to make it an unqualified success.
Now, Mr. President, members of Congress, ladies and gentlemen, this is truly the day of the impossible dream. A quarter century ago, my closest and oldest colleagues and I concluded that to seriously rebuild communities for low-income people, that this nation had to create permanent, self-sustaining institutions. On the other hand, Mr. President, your proposal to the Congress is just one more step in this nation's long journey to focus major private financial resources on making the world's most powerful economy work better for the benefit of all of its citizens. In 1970,
Thank you very much. I'd like to conclude this morning's ceremony just by saying again, as I did when I opened, that I know that every one of you who has worked in this field for any length of time has a story or personal stories that you could tell. And I just want you to know that I am grateful for the work that you have done and the role that each of you have played in bringing this bill to its present point. I got on this issue as governor when I saw so many needs that were unmet, and when the now Undersecretary of Agriculture for Community Development, Bob Nash, and I worked hard to use our existing authorities to help people who couldn't have access to credit. I learned about the South Shore Development Bank, and through them I met a remarkable man named Mohammed Yunus, who told me how he, through the Grameen Bank, had made market rate interest loans to poor village women in Bangladesh, and over 95% of them had actually paid the loans back. And then this became part of our Reinventing Government initiative of the Democratic Leadership Council, and then an idea that the Vice President championed in his efforts to examine what we're doing here. A lot of you have helped me in my understanding of this. Floyd Flake showed me the businesses around his church. Hugh McCall stayed up half the night one night talking with me about the Community Reinvestment Act and how we could make it work. My friend Charles Stith there from Boston has spent years on this. To all of you who have played any role on this, I thank you very much. And I ask you now to work with this wonderful representation from Congress, make sure we get the job done and do it in a hurry. Thank you. We're adjourned.